When you look at this global exodus, how long more does it have to run?
Well, what's going on right now is precisely why we recently downgraded developed market equities, because markets are primed to interpret every near-term inflation prints hawkishly and potentially overdoing it, right? And near-term inflation prints are very hard to predict from month to month. We can say over the long term, supply bottlenecks could resolve themselves to some extent and inflation could come down. But near-term is really, really hard to predict, and markets are primed to really read and overread hawkishly into these prints, which is why we lowered our risk taking and we downgraded developed market equities, and we want to kind of stay bunkering down until later down in the year when inflation pressure eases a little bit.
I mean, bunkering down seems like the right phrase on a day like today. What would a 75 basis point move from the Fed? I know it's not consensus at this point, but if you did and were to get 75 basis point, if not this month, then in July, what would that mean for risk assets?
Well, I think that would send panic signals across global markets, right? Because so far they've signaled 50 bips back to back and potentially more in September and beyond. But 75 bips was not really kind of talked about. So if they keep that door open in the same way that ECB keeping 50 bips open, and that sent kind of panic across markets last Thursday, we certainly could see a repeat of that. That's not our base case at this juncture, but so much focus is around the politics of inflation, which is to be very tough sounding on inflation. So we could see further kind of hawkish chatter dampening market sentiment, but at some point we do expect the focus to go from the politics of inflation to the economics of inflation, and that's when things could.
Wait, this seems like almost a very philosophical question, which is, can the Fed at this point engineer a soft landing, or do they really have to choose between, risking a recession and dealing with inflation?
Well, given the supply-driven nature of the macro environment, there really isn't a Goldilocks environment, a Goldilocks option on the table. So we do believe that the Fed will have to live with inflation because of the supply-driven nature of inflation, in the same way that ECB and central banks globally will have to live with inflation. So ultimately, we do expect a bit of a dovish pivot from central banks when inflationary pressure eases and the focus goes to the economics of inflation and the consideration about hiking rates on labor market, on the economy. But at this point, we don't see that.